If you're receiving Social Security, SSDI, or SSI benefits, I need you to listen up because there are 10 major changes happening in 2026 that could directly impact your monthly check. Some of these changes are good news, really good news, but others, they're going to catch a lot of people off guard if you don't know what's coming. I'm going to walk you through every single one of these changes, explain who's affected, and most importantly, tell you exactly what you need to do to protect your benefits. This is going to be packed with information, so stick with me through this entire video because by the end, you're going to know more than most caseworkers at the Social Security office. Now, if you're new here, welcome to Retirees Benefits. I've spent years helping people navigate government benefits, Social Security, disability, food stamps, Medicaid, all of it. I started this work because I saw too many people getting denied benefits they deserved or losing money because they didn't understand the rules. I'm not just reading off a government website. I talk to real people every single day who are in the trenches trying to make ends meet on these programs. I hear your struggles, your questions, your frustrations, and that real-world feedback shapes every video I make. Here's what we're doing today. I'm breaking down 10 specific changes to Social Security retirement benefits, SSDI, that's Social Security Disability Insurance, and SSI, which is Supplemental Security Income. These aren't rumors or maybes. These are official changes for 2026, and they're going to impact virtually all beneficiaries. I'm going to break this down by benefit type. First, retirement, then disability, then SSI, and then some general changes that affect everyone. I know this stuff can feel overwhelming, but I promise you, I'm going to break this down in plain English so you can actually use this information. All right, let's start with the first big change. This one affects millions of people. Anyone who's receiving Social Security retirement benefits before their full retirement age and won't be reaching that age in 2026. We're talking about people generally between ages 62 and 66, depending on your birth year. The earnings test limit for 2026 is $24,480 for the entire year. That's a little over $2,040 per month. What does this mean? It means if you're collecting early retirement and you're still working, you can earn up to that amount without any penalty. But if you earn more than $24,480, Social Security will reduce your benefits by $1 for every $2 you earn over the limit. Quick example. If you earn $1,000 over the limit, you'll see a $500 reduction to your benefit. If you earn $5,000 over the limit, you lose $2,500 in benefits. Now, here's something important that a lot of people don't understand. That money isn't lost forever. Once you hit your full retirement age, Social Security will recalculate your benefit and pay it back to you slowly over time through slightly higher monthly payments. But in the short term, it can hurt. If you're counting on that Social Security check to pay rent or buy groceries, having it reduced because you worked too much can create a serious financial crisis. Who's affected? Moms going back to work part-time, retirees with side gigs, anyone under their full retirement age who's working. You need to track this carefully because going over can be a nasty surprise. Some people don't realize they've exceeded the limit until Social Security sends them a notice saying they owe money back. And here's something else to consider. This is based on earned income only. It doesn't include pensions, investment income, interest, dividends, or rental income. Only wages from a job or self-employment income count toward this limit. Change number 2 is for those of you who are currently receiving retirement benefits before your full retirement age, but will reach your full retirement age sometime in 2026. This is huge because your earnings limit is much, much higher. For you, the limit is $65,160 in the months leading up to the month you hit full retirement age. So, if you turn your full retirement age in October, from January through September, you can earn up to $65,160 without penalty. That's about $7,240 per month during those months. If you go over this limit, your benefits get reduced by $1 for every $3 you earn over it. So, it's not as harsh as the other category. Example, earn $900 over the limit, you lose $300. Earn $3,000 over the limit, you lose $1,000. Again, this money gets paid back to you once you reach full retirement age through benefit recalculations. But the key here is that starting the month you reach full retirement age, the earnings limit completely disappears. So if you reach full retirement age in March, from April onward, There's no limit at all. You can earn whatever you want without any impact on your Social Security. This matters for people who are planning to ramp up their work as they get closer to full retirement age. If you know you're reaching full retirement age mid-year, you can plan accordingly and potentially earn significantly more in the second half of the year without penalty. Change number 3 is simple, and it's the best news. If you're already at your full retirement age going into 2026, there is no earnings limit. 0. You can earn unlimited income. You can make $50,000, $500,000, $5 million. Doesn't matter. Your Social Security check stays the same. No reductions, no penalties, nothing. Work as much as you want. This is huge for veterans who want to work after retirement, retirees who want to keep working for fulfillment or extra income, anyone who's reached that full retirement age milestone. Your Social Security benefit is yours, free and clear, regardless of how much you earn. For a lot of people, this is the magic age they're waiting for. The age where they can finally work without worrying about their Social Security being reduced. If you're close to this milestone, it might be worth waiting to claim until you reach full retirement age, especially if you plan to keep working. Now, let's talk disability benefits. Change number 4 is for non-blind SSDI beneficiaries. If you're on Social Security disability insurance, you need to memorize this number, $1,690 per month. That's your earnings limit for 2026. You can have earned income aside from your monthly benefit up to $1,690 per month without any problem. But if you exceed that amount, you're engaging in what Social Security calls SGA, substantial gainful activity. And that's when they start questioning whether you still need disability benefits. Go over this limit and your benefits will likely be reduced or even eliminated. You might get an overpayment letter saying you owe them money back. And trust me, those overpayment letters are terrifying when they arrive in the mail. Please write this number down, $1,690 per month. Do not risk it. I've seen people lose their entire SSDI benefit because they tried to work a little extra and accidentally went over the limit. Now, there is something called a trial work period that gives you some protection when you first start working. During your trial work period, you can earn any amount for up to 9 months without losing benefits. But after that trial work period ends, the SGA limit kicks in hard. Also, this is gross income, not net income. It's what you earn before taxes and deductions. So if you're making $1,700 gross, but only taking home $1,400 after taxes, you're still over the limit. If you're on SSDI and thinking about working, I strongly recommend calling Social Security first and talking to them about your specific situation. They have work incentive programs and specialists who can help you navigate this safely. Change number 5 is for blind SSDI beneficiaries. If you're receiving disability benefits and you fall into the blind category, your earnings limit is significantly higher, $2,830 per month. That's your SGA threshold. You can earn up to $2,830 in gross monthly income without risking your benefits. Go over that. And just like with non-blind beneficiaries, Social Security starts questioning your need for disability. You'll face benefit suspension and probably get hit with an overpayment notice. This is why it's critical to know which category you fall into. Blind versus non-blind makes a huge difference. Over $1,100 per month difference. If you're not sure which category applies to you, call Social Security and ask. Don't assume. The definition of blind for Social Security purposes is very specific. It generally means your vision is 20/200 or worse with correction in your better eye, or you have a visual field limitation of 20 degrees or less. It's not just about having poor vision. It's about meeting specific medical criteria. These numbers matter for the entire year of 2026. Every month, every paycheck, you need to be tracking your earnings to make sure you're staying under these limits. Change number 6 is about SSI, Supplemental Security Income. If you're an individual receiving SSI, your maximum benefit has gone up by $27 per month. In 2025, it was $967. In 2026, it's $994. That's the most you can receive as an individual on SSI. And remember, the asset limit is still the same, $2,000 in cash or cash equivalents. That number hasn't budged in decades, and it's frustrating for a lot of people because it keeps you trapped in poverty. You literally cannot save more than $2,000 without losing your benefits. But for now, That's where we are. $2,000 asset limit, $994 maximum monthly benefit. If you have resources over $2,000, Social Security can reduce or eliminate your SSI payment. What counts as resources? Bank accounts, cash, stocks, bonds, savings accounts, certificates of deposit. What doesn't count? Your primary home, one vehicle, personal belongings, household goods, and certain other exempt assets. The $27 increase might not sound like much, but for someone living on SSI alone, every dollar matters. That's almost an extra gallon of milk per day, or a few more bus trips per month, or an extra load of laundry. These small increases add up. Change number 7 is for married couples on SSI. Your maximum benefit is going up by $41 per month. In 2025, it was $1,450. In 2026, it's $1,491 per month. And just like individuals, your asset limit stays at $3,000. No change there. Also, I know people ask this every year. No, they did not eliminate the marriage penalty. The marriage penalty is still very much in place. I wish I had better news on that front, but it's still there. What's the marriage penalty? If two individuals on SSI get married, their combined benefit as a couple is significantly less than what they would receive separately. Two individuals would get $1,988 combined. A married couple gets $1,491. That's a loss of almost $500 per month just for getting married. This forces a lot of couples to stay unmarried legally, even though they live together and function as a married couple. It's one of the most frustrating aspects of the SSI program, and advocates have been fighting to eliminate it for years. Change number 8 is about something called a quarter of coverage, also known as a credit. This one's confusing, but it matters if you haven't started collecting Social Security yet. To be eligible for Social Security retirement benefits, you need 40 credits. You can earn up to 4 credits per year, and they're based on your earnings. In 2026, you need to earn $1,890 per quarter to get 1 credit. That's up $80 from 2025, when it was $1,810. If you want all 4 credits for the year, you need to earn at least $7,560 total for 2026. You could earn that all in 1 month and still get all 4 credits. Or you could spread it out over the entire year. It doesn't matter when you earn it, just that you reach the total. Once you hit 40 credits and you're at least 62 years old, you qualify for Social Security retirement benefits. Most people earn their 40 credits over about 10 years of work, but it can take longer if you work part-time or have gaps in employment. This matters for people who've had gaps in their work history, stay-at-home parents getting back into the workforce, people who were unemployed for extended periods, anyone piecing together part-time work. Every dollar you earn is building toward those credits. And here's something important. You don't need recent credits. If you earned your 40 credits back in the 1980s and haven't worked since, you still qualify for Social Security when you reach age 62. Those credits don't expire. Change number 9 is the maximum taxable earnings cap, also called the wage cap. I'll be honest, this doesn't affect most of us in this community. It impacts maybe 5 to 10% of the population, higher earners. But here's what it is. In 2025, the cap was $176,100. In 2026, it's going up to $184,500. That means all income from $0 to $184,500 is taxable by Social Security at 6.2% for employees and 6.2% for employers, 12.4% total if you're self-employed. So, high earners will pay Social Security taxes on an extra $8,400 of income. That money goes into the Social Security Trust funds. Will it help with the insolvency issue? Barely. It's a drop in the bucket, but it is more money going in. If you're self-employed and making good money, this affects your tax planning. You'll owe an additional $1,050 in Social Security taxes if you earn above the old cap. Everyone else, this probably doesn't touch you. What happens if you earn more than $184,500? You stop paying Social Security taxes on income above that amount. So someone making $500,000 per year only pays Social Security tax on the first $184,500. This is one of the most controversial aspects of Social Security taxation. Critics argue that high earners should pay Social Security tax on all their income. which would significantly strengthen the trust fund. Supporters of the cap argue that since benefits are also capped at the high end, it's fair that taxes are capped too. Change number 10, and this is the big one everyone's waiting for: the 2.8% cost of living adjustment. The COLA goes into effect in January 2026 for all beneficiaries. Every single year, I get hundreds of questions asking, "Where's my COLA? Why didn't I get it yet?" So, let me be crystal clear. The 2.8% increase starts in January, not December. January. Your December 2025 payment does not include the COLA. Your January 2026 payment does. For someone receiving $1,800 per month, that's about a $50 increase. For someone receiving $2,000 per month, that's about $56 more. It's not a huge amount, but every little bit helps when you're on a fixed income. Here's something most people don't know. Even if you're not collecting Social Security yet, if you're eligible and you're at least 62 years old, you're still getting the COLA applied to your benefit behind the scenes. So, when you eventually claim, that increase is already baked in. Pretty cool, right? This means if you're delaying Social Security to get a higher benefit, you're not missing out on COLA increases. They're being applied to your future benefit amount automatically. The 2.8% might seem disappointing compared to recent years when we had 8.7% and 5.9% increases. But those were responses to exceptionally high inflation. The 2.8% reflects more normal economic conditions. All right, let's take a breath. I know that was a lot of numbers and rules and limits, but here's the thing. These changes aren't here to trip you up. They're adjustments that happen every year to keep Social Security working. Yes, the earnings limits can be confusing. Yes, the SSDI thresholds are strict, but millions of people successfully navigate this system every single year while working, supporting their families, and making ends meet. You can too. The key is knowing the rules, tracking your income carefully, and staying informed. That's exactly why I'm here, to break this down so you don't get blindsided. Quick bonus change number 11. The Medicare Part B premium is going up for 2026. We've talked about this a lot recently, but you need to factor this into your calculations. The standard premium is increasing to around $185 per month, up from $174.70 in 2025. For most people, this premium is automatically deducted from your Social Security check. So, even though you're getting a 2.8% COLA increase, that Medicare premium hike is going to eat into it. Your net increase might be smaller than you expect. Just be prepared for that. If you're getting a $50 COLA increase, but your Medicare premium goes up by $10, your actual increase is only $40. That's why some people say their Social Security didn't really go up at all. So here's my advice. First, write down the numbers that apply to you. If you're on early retirement and working, write down $24,480. If you're on SSDI, write down $1,690 or $2,830 depending on your category. Keep these numbers somewhere visible, maybe on your fridge or in your wallet. Second, track your income throughout the year. Don't wait until December to realize you went over the limit. That's when you get hit with overpayment notices and benefit reductions. Keep a simple spreadsheet or even just a notebook where you write down your earnings each month. Third, if you're on SSI or SSDI, check if you qualify for other programs. SNAP food benefits, Medicaid, extra help with prescriptions, state utility assistance. There are programs that can stretch your money further. Many people leave money on the table because they don't know these programs exist or they assume they won't qualify. And fourth, if you have questions or you're not sure which category you fall into, call Social Security. Yes, the hold times are brutal, sometimes an hour or more, but it's worth it to get clarity on your specific situation. You can also visit your local Social Security office in person, though you might need an appointment. One more thing. If you're turning 65 in January, February, or March of 2026, it's time to enroll in Medicare. I know, it's not the most exciting topic, but enrolling in Medicare can be confusing and frustrating if you're doing it alone. You need to make sure you're properly covered, that your coverage starts on time, and that you're on the best plan for your needs and budget. Getting this wrong can cost you money and leave gaps in your coverage. If you miss your enrollment period, you might face late penalties that last your entire life. Happy birthday to everyone hitting that milestone. Welcome to Medicare. It's a whole new adventure. Thank you for being part of this community. If this video helped you understand what's happening with your benefits in 2026, do me a favor, hit that subscribe button down below. It's 100% free. I publish videos daily bringing you the latest updates on Social Security, disability, SSI, and everything else going on. I've got over 150 plus videos here on this channel. Yeah, you heard that right. Hundreds of videos breaking down every aspect of these programs. Topics like how to appeal a denied claim, how to maximize your Social Security benefits, what to do if you get an overpayment notice, how to qualify for SSI, SSDI application tips, Medicare enrollment guidance, and so much more. I'm here for you in any way I possibly can be. Drop your questions in the comments below. If you want me to come back with a dedicated video on any of these topics, let me know. I'm happy to do it. Share this video with someone who needs it. Hit that big share button down below. Your mom, your neighbor, your friend who's on disability, they need this information too. These changes affect millions of people, and most of them have no idea what's coming. Take care of yourself. Take care of each other. And remember, you're not alone in navigating this system. I'll be here every step of the way, breaking down the confusing parts and making sure you get every benefit you deserve. See you in the next video.